Hi, folks. Welcome back into the second video of this course, the flow in the algo. Okay, so in the first video, I explained the basics of basic demand and supply. So there's really not much to talk about on that in this video. So I'm just going to, go straight to the point and not, really bore you with too much of, talking. Just get straight to the point and do everything uh, to make sure you understand this video. Okay. So the first step we take is that we want to see the chart in a different way. We want to see the chart in a different way. What do I mean by seeing the chart in a different way? We don't want to see the candles. We want to see something related to how it was, or what I do in the first video. I mean, I drew lines in the first video to illustrate the charts. Okay, so that's what we want to do. We want to do that first of all. We want to see how the market is reacting on the line chart, not the candlestick. We're not after the candles now, we're after the line chart. Okay, so we switch the candlestick into line chart. Okay, so we have something like this. So now this is where it gets really interesting. Okay, it gets interesting here that we can't really see on candlestick, or we can see levels that have been taken here, but they are wicked out when you are on the candle chart. Okay, so I'm going to explain all these things in basic language that'll make you really understand what I'm saying. Okay, so I don't really use the 1 hour time frame. So I want to switch to the 4 hours because that's where the big play is. The big play is on the hour time just to get, to get what's happening or to get, entries, fast entries, instead of waiting to get information on the hour time. We can just switch to lower time frame, which I'm going to explain later in this course. Okay. So we've got this, we've got this chart here like this, and we can see what's happening. The big play here, we can see it. Okay. So, like I said before, I really did not explain the consummation pattern. I only did reversal for demand and reversal for supply. So I'm just going to quickly go through consummations for demand and consummations for supply by further illustrating with my pencil tool. Okay. Okay. USDJPY is going up an uptrend. Okay, like this. Okay, so this is where it gets really interesting. So I'm going to draw this again. I'm going to pause. So the market is going uptrend like this. Right. The market is an uptrend here in this drawing. What I noticed is that around this level here, something happened. So now we're going to do a little VAR here just to further explain how this can serve as a level for continuation to the upside. Okay. So what happened here is that price went up, kept down, broke this high, right? Broke this low, right? Normally, it's supposed to do something like this and keep going downward. Okay. But that didn't happen. The market then did this. The market then did this, went straight ahead to the upside. So a level like this means that the move can serve as a continuation pattern. So now let's do this. Let's continue here. So on this level, we've got this price, sorry, this level as our continuation for demand or continuation for buys, okay, for the trend. So it comes back into this. I'm going to show you scenarios like this. So, like I said before, we can't really see this kind of scenarios on candlestick. So, for you to further understand what's going on, you have to use something that can further explain the reality. You can see the line charts further explain what's going on in real sense of our illustration down here. Okay, so what do we do then? Let's cancel this. I hope you have this in your head. Okay, and the inverse of this. Okay, let me just quickly make an illustration for that as well. So the market is going downtrend, like right. So my point here is that we've got break of structure, break of structure. Sorry, we've got this low, we've got break of structure at the top, meaning that after the break here, after the short break, we expected price to kind of like go up from there, but it didn't happen. Then it sold. Okay, and then we have to look forward continuation to the downside. Okay, so that's exactly how continuation powers look. So now let's look at that on the chart. Just put that in your head and let's look at the chart. Let's see what's going on. Okay, so this is USDJPY, and this is what the beginning of the trend. So this is the beginning of the trend. So what to do at the beginning of the trend is to check for reversal, not continuation. You check in for reversal. So how do you do this? You just make sure, first of all, you have to understand that the candlestick plays important roles in the reversal pattern when you want to do it. When the market wants to change its flow, there's some things that happens that you can't really tell on the uh line chart. Okay, so we just want to do something like this. Okay, and here we can see that the market keeps going up, and what we want to look out for is we want to see recent highs or where price is reacting to a supply level, or it's taking out a recent high. Okay, so first thing you need to do is to mark out each highs, right? Mark out all the highs associated with this previous level here. Okay, so I mark out the highs because that's where it gets really interesting. Okay, so it gets really interesting here, and you mark out those highs like this. All right, so now let's understand what's going on inside of these levels. Okay, and here we have got a supply level here, right? We've got a supply there. We've got another supply here, right? And here we've got a liquidity level. We want price to reach that level, okay? So what we do now is we already make sure that that's what's happening here, right? That's what's happening here, right? So we want to see what's happening in the current market. So we want to see what's happening here, okay? So first of all, this level is, we want to check out for the first point of contact of this supply level. Okay, first point of contact. At least we know for sure that price has not broken that supply yet. So we want to look out for the first point of contact into that level. Okay, so our first point of contact is this point. Our first point of contact is here. Is this point of contact. So our first point of contact, first point of contact is that level. So we can't really do anything like at all. We can't do nothing right now because we can't do nothing because we want to see something build up. We want to understand the flow. We don't just want to get in the market at the supply or at the demand level. We want to see the change. We want to see a flow change. We want to see reversal. We want to see the build-ups. Okay, that's exactly what we are waiting for. So now we've got our first point of contact, which is that level. The next thing we do is that, okay, when is price going to go below our first point of contact? So we're waiting for price to go below our first point of contact. That's really what we are looking out for. So we're looking for when price will go out of the first point of contact, unless this will become invalidated unless this supply level gets taken out permanently. You can see, okay, this supply level gets taken out permanently. That's when our first point of contact becomes invalidated. It becomes not to go area. Okay. So now let's see. Let's go back to now that we know for sure that price hasn't really broken the demand, sorry, the supply. I mean, that's not really broken the supply. So this level of breaking first point of contact is still valid. Okay. So just move down and break the low of what's up, rejection from first point of contact. So we want to say something like this. Break this part. Price break first point high, but it didn't push ahead and traded more inside of that supply before finally getting down and then breaking the first points of contact. Okay, so now that has happened, what you have to do, or what we need to do, is that uh, we need to uh, take out the Fibonacci, like I explained in the first video. We'll take out the Fibonacci and measure from get really tricky. Okay, it gets really tricky because when I see wicks like this, when I see high wicks like this at the top, the first thing that comes to my head is no, I don't want the candlestick. I want the line chart. So if I switch to line chart, I'll see something different. So what's happening? Okay, good, perfect. So you can see it's totally, kind of like use that. I want to use this, right? Because sometimes my entry not to get filled up. I want to make sure I get in the trade as as fast. We take the low as well. We bring it a little bit up to the side, candlestick on the line chart, and then we pick the 50% of it. So we change it back to candlestick and let's see what happens. So now you can see that after switching it back to candlestick, the market immediately the price is the level. It just kept on going that aggressively. Okay, so we don't need all this again. We don't need the joins. We already got our point of entry. We already got filled up. We just need to wait and keep holding the trade. Okay, so that's exactly what we need to do after all that. Okay, so just going to take this. So I'm going to do this, and I'm going to place my stop loss slightly above. I'm not going to use the wick. I mean, there are cases where I have to use the wick. That is when my stop is not above 60 pips. If I'm getting a stop loss of maybe 20 pips around here, I will just move it up here to make it like 40 pips, because anything happens, anything can happen in the market. You can't really figure everything out in the market. It's not possible. So you just have to play safe entry. We just need to keep holding. And this is exactly how I got my USDJPY entry on I think on last week Monday. Is it? I'll show you the chart later, not now. This is exactly what I did. I picked it, and it's just like this. It's not just USDJPY. I'll try as much as possible to make videos on each pairs, explaining the strategy and how it works on all the pairs. There's no restrictions to he only works on this pair, he only works on that pair. It works on literally everything. So you have no worries. If you're a gold lover, it works on gold. If you're a Japanese yen lover, it works on it. If you are pounds USD lover, it works. Euro, it works perfectly on everything, almost everything. Okay, so now we've got this level and we've got the first sell. Right now, how do we know the target? The target is the low, right? The low. We are targeting major lows, right? We are targeting big major lows. We've got entry from major supply level. So our first TP would be major low, which is this point here. That's about 931 pips. So this is crazy. This is about 15 to 1 ratio. And it took about how many days? 14 to about February, about a month plus to get this. And trust me, this is not bad. Imagine you have a two lot size on this trade. That's averaging you to about 15K roughly, because USDJPY, I think the calculation of PIP is not really, that of gold. Okay. So to give you about 15K. So making 15K in a month is not really bad. I can't lie. It's actually pretty awesome. Okay. So now, I mean, you don't want to wait. You want to keep catching continuation patterns to the major level. So what you have to do, the line chart, explain that, okay, we explained that the market is going, and then it flips, start buying from there, but then really aligning. Serve inverse, because the market is actually, I just want to pick my Fibonacci here, and then I get in the market for what? For continuation. Okay, so that's exactly what we are going to do here. All right, we're going to do that here. Okay, so now let's see what's happening here. Very motivating because we can see that the price move up and it's kind of like expected. So that's something, something more unique that, that kind of like you can just can't be confused about it. Everything here seems pretty much, confusing, and you don't want that. You want to be sure and certain of what you get. So what you do, if you can't find it there on the 4 hours, you can just get your entry there. So this. All right, so yeah, look at it there. This is it. So we've got pretty much my explanation. We've got a break as well here, right? We've got a break there. So we're expecting price to do this, right? To maybe it did the inverse. Price broke it broke lower, right? And what you measure this level. Oh, sorry. In this kind of continuation, you don't really need the fib. Like you don't really need the fib, even though you can use the fib, but I always prefer not to use the fib if the case is not like a bit of too wide. Like I explained before, when you're picking a level that's kind of like wide, like the level is ranging between 80, 90 pips. But in terms of this kind of level, it's not really like down the rectangle, then I marked it. Okay, that's what I do. You know. Mm. Sorry, I'm trying to figure out a way to just remove this long on my days. It's really been a while. I can't really not to waste so much of my time because I've got a lot to do. So I just want to sell from here. So I pick a short position just here, above here, about 40 pips. Okay, not bad. I mean, you just need to add a little bit of, room for your stop because the market can be very tricky at times. More like in terms of volatility, you don't know when anything can happen. Just a little bit of wipe out to the upside, then maybe kind of like your entry to the stop and coming back down. And the line chart works in a way that it can even go to your stop loss and then move back into the level of this point. Okay, it can do that. I'm just telling you how it is. It can just like that. It approaches your stop and then it moves back before the current candle closes, and then it moves into the supply. And still get that, even if you have been stopped out the first time. But you just have to add a bit. So I'll explain that in other videos anyway. So we've got that, and we can now switch back to candlestick. So now you can see that we've got wicks here. I'll just delete this rectangle anyway. It's kind of like disturbing my eye a little bit. So now we'll switch to 4 hours again. So yeah, you can see that we've gotten this second entry. Still, price went back inside of it. It's still valid anyway. I just will order it anyway. I've got a higher entry with majority of my part down here. It will just be about 10% of what I have here. I don't risk too much for continuation trades. I don't care. Even if I know it's going to zero, I still prefer holding my top positions and adding little positions below, not higher positions below. A lot of traders do that. They put low positions on the upside and then had high positions downside because they believe they could make quick bucks doing that. But the real truth is, if anything happens in the market, you get wiped out before the market even reverses back into your main entry, which is bad. Okay, so you don't want that to happen. You want to stay in the market for as long as you want, for as long as possible, to be able to make the best of it. Okay, so now that I've got, which is my take profit, so I've got another 14 to 1 trade here. That's all for me. I don't care how many other trades I get here. I just will be fine with getting two positions and holding to the end of the trend, to the end of the flow. So I don't get greedy. I just do what's best for my positions, for my capital, because I always tell my students this: your capital is your strength. Okay. So I believe this will bring us to the end of this video. I believe I've explained this the best possible way that I can. And in the next video, will be using another pair as an example, maybe for buy positions, to understand buy positions, of maybe it's gold we'll use, I don't know which pair we'll use it, but we'll just get on that later. So I believe you understand this video and I hope it helps you guys. I wish to see you in the next video. Thank you for listening once again. See you.